Wonderful good day, ladies and gentlemen. Mines and Money London 2015, and we are here on the second day. We are now in the afternoon and found a very interesting company, Altius Minerals. And with me here is Jed Wells, the Vice President Corporate Development, and we want to talk about this interesting royalty company. Jed, thank you very much for taking the time.
Thank you very much, sir.
Altius Minerals. You are the first time on our two channels, and give us a short overview. Where are you based? What is the company doing?
Sure, yeah, well, we're a Canadian royalty company. We've been around about 20 years doing active mineral exploration in a themed, what we call project generation, primarily in Eastern Canada. That strategy was very profitable for us over the last 20 years, to a point we made several $100 million in effectively creating geological concepts, projects, ideas, taking said projects, selling them on to third party in a way that I tend to dub geological real estate, and in that sale transaction making money, but at the same time attaching underlying royalties to the assets of those transactions.
So that you have an ongoing cash flow then?
Yeah, so what that really did for us is it made us a big bunch of money in the bull market. We're pretty frugal guys, so we made this capital. We put it away and put it in our pocket during the bull market. We were waiting effectively to deploy the capital, embracing the cyclicity of resource markets. There's bears and there's bulls. So we made it in a bull. We wanted to see the bear market to deploy that capital. So when things started to roll over about 2 years ago in the general resources market, the mining resource market, we basically went back to our pocket where we had put away this money, and we went hunting for assets that could augment the royalty creation strategy we've been implementing. We went out and we bought a collection of production stage royalties.
Where it's only Canada?
All in Canada, all in Canada, and very diversified across the commodity spectrum. You know, we have some coal in there, we have some potash, we have nickel, copper, zinc. Our strategy really as a royalty business in our commodity exposure and diversification would be to emulate at the royalty level what a mining house like Rio Tinto has in the sense of commodity exposure. We believe that commodity diversification mitigates risk because, you know, each of those commodities has different cycles, independence, whatever. The other side of things that we've focused on, obviously, is today we collect about $40 million per annum in royalty revenues, but it's across 13 different assets. So that asset diversification is also very on purpose, because mining is a very risky business. So, you know, we didn't want to have all of our eggs in one basket in the sense of all of our royalty revenue based on a single asset or just a couple assets, because in markets like today, when times are tough, these assets could get challenged and could cease to exist or go into care and maintenance. Then we would have no revenue. But because we've had that revenue across 13 different assets, the likelihood that 13 different mines are going to close is very unlikely.
Yeah, probably one or two, but you're still in good shape.
That's right. But in our case, we've been very fortunate. We've had this portfolio now for about 2 years, and all 13 royalties are producing based on our forecast of when we acquired these things. And I'd argue to say the last 2 years in our market have been the most challenging. So I think it's a true testament to the quality, the durability, and the reliability of that cash flow stream collectively off of this portfolio.
Okay, perfect. May I ask, can you say something about the, let's say, maturity of your royalties? I mean, is it limited or is it open-end? Of course, it's limited to the mine life, that's for sure.
That's a fantastic question. The biggest attraction we have fundamentally as a bunch of geoscientists, doing exploration geology, it really is about the longevity of mine lives. When you buy royalties or when you buy assets, the way that these things, quite frankly, are computed is what's called the discounted cash flow model. So effectively what you're doing is you try to value how much cash per annum can be generated by that asset, and then you try to quantify that in a purchase price. Well, what that discounted cash flow model does well is it models things out for 15 to 20 years. So what it means is that you effectively will pay with a certain idea of rate of return you want on a 15 or 20 year cash flow stream. So that if your mine life is beyond the 15 or 20 years, arguably that cash flow beyond that timeline is free. You're actually getting as optionality and free. So all of our assets today, collectively 13, the weighted average of mine life duration is about 26 years. But we have assets specifically in our potash portion of our portfolio that have reserve base in excess of 1,000 years. So these are assets that are going to pay my kids, their kids, their kids for centuries to come. So that really is attractive to Altius. So that is a reason that as a royalty company, we focus on the base and bulk metal mining space, because we believe those assets generally have much more longevity in mine life versus the precious metals or gold deposits that are typically 8 to 12 years. So fundamentally, we've been driven to the base and bulk metal royalty space by choice. But at the same time, right now, in the minerals resources space in general, there is a lot of attention on royalty specifically, because it's a very good way, structured way from a risk profile perspective to participate in mining. But where we're seeing a lot of competition in precious metals. So that's another reason why we really want to focus on the bulks and bases, because we can still get a good rate of return there.
Yeah, that makes really sense. Let's come a bit more to your company. First of all, what is management share? Because when you talk about inheritance, you must have some shares in the company. And also your colleagues, I would say. And the other thing is, please, elaborate a bit. What is cash in the company? You say you have 40 million income every year. But what is debt? What is cash there?
Understood.
Give us an idea.
So, from a shareholder profile perspective, management collectively, we sit on about 10% of the shares.
Nice.
And, again, we've been in business 20 years. The true founder, my CEO, Brian sits on every piece of share he had since the beginning. He's a 5% shareholder alone. So we are very aligned with regards to our own, I'll call it net worth of making Altius a success. We really believe in that, and so very aligned with shareholders. In addition to our actual balance sheet situation right now, when we made the acquisition, the big acquisition about 2 years ago, for a very brief period of time, we took on a fair bit of debt. We took on about $140 million, which at the time, debt to us was very foreign. We didn't know what debt was. So we immediately, obviously, wanted to lessen that burden. In 1 year, we've been able to take it from 140 million to a net debt position today of about $35 million.
Wow.
So to put that in perspective, we are one year of royalty cash flow away from being debt-free.
So what's the burn rate?
Our burn rate to do everything we do is about $5 million a year.
Oh,
so
that's
again,
easy.
we have more than adequate capital to preserve both our project generation geological real estate business as well as our hunt for royalties. So what we're really doing now, though, is we have a very modest dividend program. We're doing about a % yield. At the same time, our true debt situation is about $60 million because we're sitting on about 30 million in cash. So that's why I say the net debt's about 30 million. But the reason we're doing it like that is really about capital allocation and maximizing firepower in the sense of other royalty acquisitions the company can make in this challenging market, which for us is a very opportunistic time to build value and create more value for our shareholders.
Now you get the bargains.
There you are. And that truly is what the resources business is all about. It's deploying capital when it's really bad.
And nobody wants it.
Right. And it's having then the discipline that when the bull market returns and there's much investment fanfare over our business, to find ways to profit and monetize some things, because the bull to the bear can be feast of famine in the sense of valuations of businesses, whatnot. So you really got to embrace the cyclicity to truly, I believe, to make fortunes for your shareholders.
Absolutely.
And that's really what we're trying to do here at Altius.
Make fortune for the shareholders. It was a good final sentence. Chet, thank you very much. Very interesting company. I'm really impressed. And all the best. Merry Christmas.
Thank you very much.
I'm sure you make it 2016.
Absolutely. Thank you very much. Have a good day.
Yeah, ladies and gentlemen, it was Chet Wells, the Vice President Corporate Development of Altius Minerals. Yeah, royalty company, you heard it. They generate about $40 million income each year and have 13 income properties, or how can I say that, income streams from really diversified minerals and locations, and they have everything in. Potash is in, copper is in, gold you have in, right?
We do have some, yes we do.
Exactly, some silver I think also.
Yeah, we have a bit of everything. That's very intentional.
Exactly.
Diversification.
Exactly, so a bit of everything. The company is paying also dividend, and I think with a $30 million cash balance and a roughly $30 million net debt situation, very, very healthy, and in those times that's exactly what you should look at. Thanks and bye-bye from London.